Welcome to this month's talk about the forecast of January 2023. So I think roughly you will know that January 2023 might be a good month, judging from the title I have here for it is like a beautiful, it's like a beautiful sunset here from the title. So it means that there could be some good news. We shall check what are the good news. Okay, so as usual, the agenda of the talk, let me just okay, as usual, the agenda of the talk, we shall start with the introduction, disclaimer, a brief recap of last month's forecast, the influence of 5 elements energy in January 2023, and also PC section on 2023 geopolitical finance forecast. He will also do a recap from the global trend research and the summary by me and BC. Okay, so as usual, there will be a disclaimer that this content is purely based on our study of the global trends in related to 5 elements in Chinese astrology, and for you to use as a guideline in your investment decision. So I would advise that you exercise caution in your investment, especially in the volatile situation. We will not give any stock advice, and also we will not be claimed for any loss or any profit that you have made, maybe, from the information that you gain from this talk. Okay, let's recap last month's December's trend. So December, we know that it was a renzi. I think there's one member also put it in the telegram that, the renzi. Renzi means that very big water, very cold. And in the year pillar, we still have the water element. Water element is actually a cold element and wood. But however, the wood will be sort of submerged by so many water. Although wood, water that's create wood, but if you have too much, then it will be submerged in the water. So, and also the hexagram was thunder. Thunder means that you can see the thunder in the skies, right? So means that there will be a lot of instability going on, changes. Whenever we see the hexagram thunder, this is one thunder here, and this is another thunder here. Means that because 6 one trigram, this is 1 2 3 3 lines, we call one trigram. So hexagram is 6 1 2 3, another it is a mix. Is actually a sort of a combination of 6 times 6 64 hexagram of these trigrams. Okay, so thunder means that is something that quite surprising, some changes. Okay, I think in global trend it also could mean earthquake. Okay, so let's look at first of all, the trend already show you is cold. So we have a lot of unusually cold weather. Sorry, this is unusually cold weather with power outages in, I think, North America, and also I think in Europe also. And there is a brutal cold stretch also in US. I think there's blizzards, and people just now I think BC stated that people just buried in the car, unfortunately. Okay, there's so many sad incidents going on. And I checked, there's also an earthquake in California, at the coastal of California. 6.4 magnitude is considered as quite high, right, BC?
Yeah, but I think it's not to the extent that it will cause heavy structural damage. I think anything above 7 would be quite sufficient to cause some structural damage. I think at 6.4 will be minor, perhaps.
Okay, but still there's an impact. So inflation also has reached all-time high, because this one also, as I said, this is what money element is water. So it reached all-time high, and also there's a lot of changes. I think there's a lot of changes in December, so you can refer to PC's list afterwards on what are those changes. Okay, the next one is on, okay, this is what happened. Some of the earth shaking or some of the changes in the financial system, in the earthquake, and also in a lot of shooting incidents, a lot of unrest also going on, because I think people basically are not happy. So they have, a lot of massive bombings also intensified. The war also intensified with massive bombing or counterattack from Russia as well. Then let's look at December. Okay, so this is winter solstice. Let me just go a little bit on winter solstice chart, because the winter solstice chart also will determine the next year's outlook also. Okay, because we have a Chinese saying, winter solstice is a 冬季 冬至 So there's also a saying that 冬百过年 that means the 冬至 is 大过年. Okay, so it means that sometimes this type of chart also will determine the next year's action also. You can see that still water is quite a lot also in this, so that generally it shows that this is also an imbalanced chart as well. And that means that next year's outlook will not be very good in this sense. Hey, next, in month of January 2023, look at the energy. So the month of 2023, the big water has already subsided. So now we have the small water, mist, okay, a mist type, and then with earth. That means the cold element is not so many anymore. It has already reduced. So water will means that the weather will be less cold. Then the property market could also be, badly affected in regression. It seems that because of this coming in, it seems that, everything will turn for the better. Government seems to be in control. Seems only, I didn't say that really. Okay, looks like they are in control of everything now. Okay, so
even maybe I should add that
okay.
The government right now is driving the narrative. Like throughout 2022, the Biden admin narrative is that jobs continue to grow. But then just 2 weeks earlier, the Federal Reserve of Philadelphia dropped the bombshell that the Biden admin has overstated jobs growth by about 1.1 million jobs. Okay, so this is some kind of government manipulation of data, but I think things are going to be more geared towards control later on, and I'll tell the reason why. Yeah.
Okay, sure, thanks, PC. Okay, so month of January, the hexagram is a beauty hexagram. So when we do a personal forecast, we like to see beauty hexagram because everything looks beautiful. Actually, this is a mountain. Here is a mountain. And then here is actually the sun here. I couldn't find my pen. Okay, never mind. So this is actually the mountain here, and then the sun here, and it's actually a sunset. So sunset is beautiful or not? Let me ask our participants here. Is sunset beautiful? Yes. Okay, good. Okay. So sunset is beautiful. So everything looks good on the surface. But do you know sunset does not last long? It's very time limited, right? Yeah, okay. I know. Yeah, so this is why the beauty hexagram is always termed as sunset, not sunrise, because sunrise at least you can have a daybreak. This one is like, after at least half an hour later, you cannot see the beauty anymore. So it means that time is limited. You can see that it could be that economy, stock market could see a rebound, but maybe it's for a very limited time only. Okay. So I think that's it for my portion, PC. So let me pass it over to you. Do you want to share the screen?
Yeah, I share my screen.
Okay, can.
Yeah. Okay, so what actually happened in December. Now, there's a lot of course, the big news is that besides the US 1.7 trillion omnibus bill, in December, we said that news channels reported that US and EU were pressuring Zelensky to the negotiation table. But it seems that they have reversed their decision and doubled down on their support for Ukraine. Now, this, I think, Zelensky said a lot of things, but he is still the puppet of the US or UK for that matter. Because sometimes he say he's willing to negotiate, but then, eventually, after some back channel talk, Zelensky then would raise the stake and then will say that he will only negotiate when Russia is out of Ukraine, which can never happen. Okay, and the latest news yesterday was Zelensky say he's willing to negotiate, but then Russia, including Putin, have to stand trial for war crime. Again, it's like they are pushing the narrative that, hey, it doesn't mean that Ukraine, US, and the EU does not want peace. They want peace, but then they set the terms that are impossible, so that they throw the ball back to the Russian and to Russia and say that it's the Russian that do not want peace. Okay, because we have told them we wanted to, based on these conditions. So this is a back and forth kind of thing, and which can only mean that it's going to be extended. That war will be extended. Like some geopoliticians like to say, the US, for that matter, NATO would like to see the war being waged between Ukraine and Russia to the last Ukrainian. Okay, this is what they want. Okay, because that war is not fought in Western Europe. It's fought in Ukraine. It's not fought in the US. It's fought in the Ukraine. So that is why, as long as that war never reaches them, it's always good to put money to support Ukraine, because their intention is to bleed Russia. But it seems Ukraine is bleeding more because of their lack of weaponry and equipment. So the part of the 1.7 trillion omnibus bill is actually 44 billion funding going to Ukraine, and just after that, days later, another 1.8 billion of additional aid to Ukraine's military. Now this has a lot to do with the military hardware as well as the Patriot system. And meanwhile, the EU will provide 118 billion to Ukraine throughout 2023. So when you look at this, just now Evelyn and I were discussing earlier that the US has more than 1 million people homeless, and in this freezing temperature, many would have died, okay, during this sudden blast of Arctic chill. And 44 billion is a lot of money, but instead of helping its own citizens, the US would rather that money goes to fund a war, which will cause even more death and destruction. And the EU is the same, because right now this has become a war of ideology, okay, with political motives and objective. It is not for democracy or freedom or for the better of mankind. Okay, so this is how skewed the political view versus the economic view. So when money is thrown into the black hole, which is in Ukraine, okay, there's going to be a lot. All these countries will just continue to incur debt. Imagine that the European Union is facing massive strikes because of people's anger with the government. They would still continue to fund Ukraine rather than to use the money to look at how to improve the lives of their own citizens. Okay, and that what democracy it is in this so-called democratic country, when the people's wish for let's say basic necessities such as energy, food, and shelter are not met. Okay, so that is how unbelievable the world has become. And last month we said that initially there were resistance from SML, against US sanctions of selling its equipment to China. But I think after a lot of talks, okay, the Netherlands eventually bowed down. Okay. And because of that, Japan will also follow the Netherlands. So they will actually limit their export of chips making equipment to China to 28 nanometer and above. So both countries have bowed under US pressure, although earlier there were signs of resistance. Now, I think, 28 nanometer is a mature technology, and where China is concerned, there are reports that I read that, about 80% of Chinese technology requirement is actually 40 nanometer and 28 nanometer. Of course, 28 nanometer, is closer to 70%. They don't require that 5 nanometer and such because they are not, these are only applicable to those small gadgets that needs very high processing power, okay, like smartphones and such. So, well, we just have to see, okay, how this will develop later on. I think potentially, yesterday I sent out a news article that mentioned that Huawei has actually developed a EUV scanner. They have actually filed the patent in China. So if let's say Huawei can continue to move forward from there, China would eventually have its own EUV. And in 2023, China would actually start production of its photonic chips. So photonic chips, I think, has a lot to do with the quantum science. And if let's say China can pursue in that direction, then they can be actually independent of any EUVs in the future. So it remains to be seen in that regard. So where we got right now, we did mention that the housing crisis will worsen in December, and true enough, the National Association of Home Builders Index, fell from 33 to 31. Then the G7 and EU, as mentioned by the mass media, finally implemented a price cap on Russian oil at $60 per barrel. But just this morning, Russia responded by banning sale of oil and oil products to these countries who put a price cap on Russian oil. Now, immediately, we may not see, a very substantial rise in the price of oil, because right now, a lot of economic activities are being wound down throughout the world, especially the Northern Hemisphere, where there is severe winter. So what could happen is that as soon as spring breaks, okay, China would actually, China will be fully open for inbound tourism, as well as allow outbound their citizens to fly outbound on June 8th, 2023. Now, once, millions of, the last time Chinese did travel overseas, there were 150 million of them before COVID. So assuming 150 million Chinese decide to travel overseas, that would actually cause a spike in the demand of oil, okay? And throughout China, if they travel domestically, it's actually 400 million people, okay? And if they include the rail, that would be another few hundred more million of people. So with China reopening, that would exert a pressure on the price of oil. And it will coincide with the US needing to refill its strategic petroleum reserve, which is now down to close to about 30, I think the last time I checked is 33 or 35%. Yeah. So, after a lot of discussions, finally, power rationing in EU has started in earnest as winter set in. And then gold and silver continued to leave the COMEX and LBMA because I think in our November forecast, Evelyn study of the charts, astrology charts, is showing, there's a sign of so-called shortage in precious metals. So up to now, gold and silver continue to leave the COMEX and LBMA. And I think since then, gold especially have risen from 16 plus 100 right now to 18 plus 100, close to about $200 per ounce, and silver from about $17 plus now to $24 plus, which is a gain of almost $7 per ounce. But $7 against 17, okay, that's quite a huge jump, okay, equivalent to about close to 40% jump in the price of silver. So China housing sales continue to show weakness, falling 23.3% year on year in November. Now, these are the report that came out in the month of December, okay? And I think China housing sales would continue to be weak because, most Chinese, for most Chinese investors, it's like one bitten, twice shy. So Russia has been unrelenting in pressurizing Ukraine as missiles wreak havoc on Ukraine's infrastructure. More Russian troops and equipment in Belarus, this action suggests an imminent winter campaign. And Saudi Arabia and Algeria finally applied to join BRICS. Now, if one were to overlook, well, Saudi is a major oil producer, but what is Algeria? Well, Algeria is a major gas supplier to Europe, okay? And Algeria is also a member of OPEC, just as Saudi Arabia. So you can see that the OPEC countries are now converging towards joining the BRICS, and it could have quite a wide ramifications for the petrodollar, not immediately, but I think probably in the medium to long term, as the development of a BRICS reserve currency continue to progress and eventually mature. So January, what are the economic and financial implications for the US? Now, US housing worsened in December with the NAHB index falling from 33 to 31. And housing starts and building permits continue to weaken by 0.5% and negative 11.2% month on month, respectively, in November. Now, these are actually some figures already dictating something. Now, the NAHB and building permits are lead indicators suggesting persistent weakness going into January. So if November is already at negative 11.2% and December, the NAHB index falling to 31, that means December eventually would be another weak month for housing, okay? And what we will know for sure is that it will not jump, like from negative 11, it will go back into positive. And then from 31, which is in deep contraction, versus 50, which is a benchmark for expansion, it will not go from 31, to 50 above in January. Therefore, that persistent weakness will continue because it will still be weak. There's not going to be an immediate recovery. And that's why I think January will still come up with very underwhelming figures. So some of the housing data that came out in the month of December, because they are a lagging indicator. We already see how big the damage is. Existing home sales is down 28.4% year on year. Excuse me. Pending home sales is down 36.7% year on year in October. So by end of this month, pending home sales will report its November figure. Don't be surprised, it is going to be somewhere around 30 to 40% down. New home sales is 15.3% year on year in November. Now, in the month of October and November, new home sales actually rose unexpectedly. a lot of people were saying, how can it rise suddenly, whereas pending home sales and existing home sales are showing, negative month-on-month growth. So it's very clear that here we see that building permits falling. That means that the builders are not going to build new homes very aggressively. And why the new home sales suddenly saw a huge surge in October and November was because the home builders are actually selling off their inventories for fear of what the market could be in 2023. So that is why, even on a year-on-year basis, they are still down 15.3%. If they have not sold off their inventories, it is going to be even, worse than 15.3%. So because they have continued to unload inventories by offering discounts, okay, special packages, so that they get back their cash value instead of inventory that is valued at a certain price, but due to the fall in demand of housing, we'll continue to see the price of the inventories falling as well, because house prices have started falling, okay? So US housing unlikely to see any improvement anytime soon and could deteriorate further as the effects of high interest rate environment curbs demand. Now, why Evelyn just now mentioned that January could see a rebound, okay? And I think it has a lot to do with this chart, okay? There is an indication that the CPI, the Consumer Price Index, is softening. From 9% right now, it has fallen to 7.1%. And there are indications that there is some deflation in the price of goods. For example, the US trade deficit came down quite drastically from expected 90 over billion. It came down to just 80 over billion in trade deficit. That means that Q4 could see better than expected GDP growth, okay? Because oil price, US continue to sell a lot of its oil, okay, to Europe. And that's why the SPR, the Strategic Petroleum Reserve, is seeing, continual drop in its inventories. So that SPR is being used, you can say, to subsidize the GDP growth, because as it push up its oil export, its export is going to be much higher. So that again, okay, because of the high inflation, the retail goods are finally seeing a fall in price, especially in used car and new auto vehicles. Now, because of this CPI print that will likely hit in, January would likely report a CPI print that could be lower than 7.1%, then it could start a January stock market rally, okay? And if, let's say, it happens, then the Fed will likely decide, okay, from 50 basis point, we are going to hike maybe 25 basis point, and that would actually spur the rally further. But as we all know, China is going to open in spring, and that would be in February, and there will be mass travel from then on, and there will be, another cycle of huge demand for resources. Now, if let's say China economy is not of much significance, then it wouldn't create another inflationary upcycle. But China's economy is not very far behind the US. For example, US is a close to $25 trillion economy. China's economy is closer to about 17 trillion. Not much actually differentiate between the two. So if, let's say, this pick up, then we will see another upcycle in inflation, okay? And when inflation starts to kick in, okay, probably around the towards end of Q1, because then the demand for the Chinese travel and all those start to pick up in the months of February and March. Then Q1 we will likely see inflation ticking up again, and it will continue into Q2 because travel in China is the most during the summer months. Okay, and then we will see that people once again are worried about inflation, and the stock market would start falling. So I think another factor that could create that the stock market to fall, okay, perhaps in the March period or early Q2, is this chart, but I will talk a bit afterwards. So now this is a 1970s inflation chart, and according to many economists, inflation normally propagate in cycles. It is not on a linear projection, and then when interest rate kicks in, it comes down. Inflation needs to wear itself off by continual hike in interest rates. So in the 1970s, it's much easier because at that time, the US debt, okay, is not in trillions, it's only in the hundreds of billions. Right now, US debt is close to 31 trillion, if I'm not wrong. So that means that it's already, could be 100 times higher. And that means that this inflation cycle will not likely be similar to the 1970s. So what we will likely see is that it will taper down because everyone thinks that the Fed has won in the inflationary battle. And then it will start to tick up. The Fed might continue to raise interest rate, but sometime along here, the whole economy would go under. And this chart explains why. You can see in this chart, okay, that the global liquidity indicator has fallen to here, okay, and it is a lead indicator, and then it leads by 18 months the S&P earnings. So that means, okay, we see that it has reached a peak, and sometime over the next 1 to 1.5 years, the S&P would actually start to decline drastically. And I think global liquidity could plunge even lower because central banks are adamant like the Federal Reserve is adamant to see inflation reaching 2%. But I think at some point, even the Fed will give up. Okay. Now, because of this plunge in liquidity, and with interest rate hike starting in February, in March, there is always a 12-month lag to about 18 months lag in terms of impact of interest rate. So that means if interest rate started in March, okay, the high interest rate started in March, with a 1-year lag, likely will be in the end of February. So that means recession would probably hit in late Q1, and if not, by early Q2. That means that it's a 15-month from the impact of interest rate, and it coincides with the liquidity. So that also goes to show why January is a sunset. Okay, it's like a last hurrah. Okay, for a bear market rally, and then it keeps going down because the impact of interest rate will be felt by then.
Also, this also coincides with the Mother Earth Oracle or prophecy says that the first half of the year of 2022 will be quite good. After that, it will have a problem, and the timing also coincides quite nicely.
Yeah. So another thing is that this is a recession indicator measuring all the inversions in yield curve. So inversion in yield curve, how is it measured? It's like a short-term yield versus a long-term yield. So that's when the difference becomes the yield inversion. Okay, which means that the 2-year, let's say the 2-year yield interest, the yield is actually much higher than the 10-year yield. Okay, that is when you have an inversion. Now, whenever the yield inversion of 70% of US Treasuries happen, it always coincides with a recession. So for the past 7 major recessions, they have demonstrated it's highly accurate. So this is the COVID recession, okay? The housing bust, the tech bust, okay? This is the S&L crisis in 1990. I think this has to do with the could have something to do with the Iraq war, if I'm not wrong. Then the double dip recession, this period, this could be the long-term capital incident, starting in 1987, and then they pump a lot of money to save it, and then it create another crisis. So this is the double dip recession, okay, of the 1980s. This is the inflationary bust of 1973. Now, in 1973 to 1974, the Fed actually hiked interest rate, and then they started to cut interest rate when there is a recession. So that caused, okay, the inflation to move up again over the next few years, and then we have the crisis here. Now, right now, the number of inversions is 91%. That means it can only be much worse, okay, than the COVID and the housing bust. So if it continues to progress higher, then it could be as bad as the tech bust. But these are just an indicator, but it goes to show that inflation is almost a certainty. So these two charts are already telling you that 2023 is not going to be a very good year, okay, where the financial assets are concerned. And because of the housing crisis, it will also affect the real assets. So that is why if the Fed continue to hike interest rate, even in Malaysia, Bank Negara actually have to keep hiking as well, because if they fall behind the Fed, then the ringgit will actually start to depreciate. Now, one of the key things to fighting inflation is actually to have a stronger ringgit, okay? And but I think sometimes the government would want to look at how to increase its exports, and therefore they want to have a middle path. But while you can increase the export by a weaker ringgit, having a strong ringgit will actually reduce the cost of consumption, because you import, the cost of import is much lesser. So sometimes, is where, how the government would want to manage the economy. And if the ringgit is strong, then people may not want to, you might actually import less. So actually it depends on where the concern lies. But I think majority of the population is right now more worried about inflation, their daily livelihood, than actually GDP growth. Okay, I think that is the most important thing. So what other implications on the US? Now, this is where I think regulations would be very prominent. The blow up in the FTX and subsequent outflow of cryptocurrencies. Okay, there's a spelling error here. Okay, blow up of cryptocurrencies from the various exchanges has put many exchanges at risk. Many prominent hedge funds which suffered heavy losses in their investment in FTX have clamored for more regulations. So you can imagine, the behavior of those hedge funds, okay? At first they say, well, put the money in FTX because it offers freedom, okay, privacy, from government infringement. So everyone pile their money in, and then when it blows up, dear government, please implement more regulations so that it's regulated and we won't lose our money. So you can see how people flip when they suffer losses. So that's why inevitably, because all these hedge funds, they are very prominent individuals, many of them are billionaires, okay, they can actually push the government to implement something. So that's why inevitably this will draw many authorities to implement policies which will be to the detriment of privacy and freedom in the cryptocurrencies trade. Okay, so that will be one of the impact from the FTX blow up. And there are a lot of rumors saying that a number of prominent crypto exchange could also fail in the future, but that remains to be seen. So far, people are saying that the Tether backing of US dollar they say that Tether is backed by same amount of US dollar, but some research has shown that it is only 50% back. So Tether could be the next one to implode, according to some analysts. Of course, people are saying if everyone is imploding, then Binance would actually implode as well. Okay, so that's why there's a lot of negative sentiment right now in the cryptocurrencies. But
okay.
Evelyn, you want to add something?
I don't think it will go until this extent, okay? Because cryptocurrency will be one of the prominent things in the next 20 years as well. It could be, this could be temporary, and everyone will be going, definitely there will be a direction going into the cryptocurrency, and according to some prediction, there will also be, a rebound of Bitcoin next year. I cannot tell you exactly when, but that is just a calculation. That is all that we have done from the astrology point of view. Okay.
Yeah. So right now, this is what the people, what those people have lost money wanted to, they want more regulations. But interestingly, you will see that we offer a very we offer 2 points of view of cryptocurrencies in our book. And if you have read it, you will understand why we think the mainstream cryptocurrencies, which means not the central bank digital currencies, the mainstream cryptocurrency will still have their appeal, and we explain that in our book. But there is potentially a bombshell that could happen. Now, with all these regulations and sanctions, there were some murmurs of talk in the Kremlin that they might even allow transaction of commodities using Bitcoin, okay? But it has not reached the mainstream yet. Through some channels which I've read, there are some discussion, okay, how to use Bitcoin to trade in commodities to allow, countries wanting to escape from the petrodollar to implement trade that is beyond the prying eyes of the Five Eyes nations. So I think these kind of events would continue to evolve. But if you have read the book, then you will have a better understanding of why we think there are two schools of thought where this is concerned. Okay. Now the other thing is that just now Evelyn talked about, temperature is going to be warmer. In fact, Evelyn shared with me that what the chart says some weeks ago, and yesterday, higher temperature is forecast across the US as the Arctic blast is gradually winds down. So in January, in fact, there will be a little bit warmer than the persistent cold in December. And this is already telling you that, all the way from East Coast to the center of the US, there'll be gradually improved temperature. Okay, so this goes to show that there are actually some accuracies, okay, where the study of astrology can predict perhaps weeks or days in advance of certain events. Okay, now the other thing is the EU. Now, UK is the worst hit among European nations as it is saddled with high inflation at 10.7%, widespread strikes paralyzing the NHS, rail service, and postal service. It's like these three major important services to the population. They are taking turns to strike. And, you know, I sometimes the NHS is actually the national health system. And national health system or health service, okay, these are doctors and nurses, and if they go on strike, you know, can you imagine the kind of burden it will happen to the society, where people needing immediate medical care have to postpone simply because there are not enough personnel. So this is actually, you know, sometimes this kind of strikes can be very detrimental to the population. And that is why sometimes they don't get the support of the population. So, but it is, all this is going to do, it will put the UK, you know, pull the UK down into the doldrums. Now, UK intends to provide £650 million in new aid to Ukrainian refugees, even though its economy is on the brink of collapse. And this is just doesn't make sense to a lot of ordinary people. Okay, can you imagine, you know, like our government also decide to support Ukraine, and then we decide to pledge 1 billion to Ukraine, you know, whereas, you know, right now the citizens are facing, you know, difficult choices when it comes to inflation. So the EU will continue to provide 1.5 billion euros a month to, you know, in funding Ukraine, even though demonstrations are widespread across the continent, and that includes call for France, okay, to leave NATO, and Germany, you know, calls for the German to, you know, to restart, you know, the economy relationship with Russia. So we could see the governments legislating new laws to restrict demonstrations or even to outright ban them. Now, a lot of people have the misconception that the EU is fully democratic, but the people who manage the EU Parliament itself consists of unelected officials. The election is only held in that particular country that is a member of the EU, but the selection of people that to the EU Parliament are selected. They are not elected. So that is why, okay, there are now certain signs of panic among the EU nations, and there are talks that they should legislate new laws to curb freedom. Okay, and the UK is actually progressing with a public order bill which is aimed to restrict the right of protest, the right to protest. So how, you know, it's like these countries are the one that says freedom and democracy and rules-based order, but you can see that within their country, they are flouting all what they preach to the world because they are in panic mode. They are afraid of the people rising against the government because of their idiotic policy, you know, where they continue to fund the war in Ukraine, even though their respective, you know, citizens in those countries are suffering. So UK banks were reported to be pushing for individual carbon footprint tracking. For those who have read our book, okay, which we published in November, we already were saying that signs are there, okay? And true enough, in UK, banks are reported to be pushing for a legislation, you know, for individual carbon footprint tracking, okay? So this, you know, a lot of things that we mentioned in the book, okay, is now, you know, becoming more prevalent. So what Evelyn and I do, we pick up certain nuances, okay, in certain trends and then we try to match back what the forecast, of the astrology charts to give us a direction of what could come. Okay, and I already mentioned about individual carbon footprint tracking in our book, which was released about 2 months ago. So after putting more than a month ago, not 2 months ago. So after putting a price cap on Russian oil at $60 per barrel, the EU agreed to put a price cap on Russian gas at 180 euros per megawatt hour. You see how they try to, put price control. Now, price control will never lead to lower price. Price control will always lead to higher price. Because when you suppress the economy of a particular sector, what will happen is that there's no incentive to develop that sector. So when there's no incentive to develop that sector with manufacture the goods will become scarce. And that is why price will rise.
Okay, another thing is that we are also in supply chain. So one chain will impact another chain, right? Yes. So this is also very important because scarcity in one will impact, the next chain down the road. We are already in a globalization where the supply chain become very important.
Yeah. So that is why this kind of price cap will not work, because Russia already say you put a price cap, we just don't sell to you. Simple as that. And I can roughly estimate that further down the line, Russia and OPEC will decide that due to an economic slowdown, they will actually going to cut production again because they want to protect their price. Now, despite all that is said about all the major oil producers and all those, the amount of money spent to extract a barrel of oil has been increasing over the last 100 years. Okay. For example, the same amount of money to currently use to extract 11 barrels of oil is equivalent to the same to that amount that you can use last time to extract 100 barrels of oil. So that means that what is this saying is that the near surface of resources is depleting, and not only oil, that includes various metals, industrial metals, precious metals. They have to dig deeper, and that means that the cost of investing in that extraction of that mineral has increased. So that is why Saudi Arabia, the OPEC, they want higher oil price, because the near surface is going to be depleting soon. If they don't make their money now and use that money to transform their economy, then they would have missed the opportunity. So that is why I think OPEC and Russia will work hand in hand to ensure that the price of oil remain elevated. Because if not, the cost of extraction of more oil in the future will be even more expensive. So they need to make that money right now. Okay, so China's non-financial outbound direct investment, which means China investing overseas, reached 687 billion, okay, for the billion in the 11 months, up 7.4% year on year. Okay, foreign direct investment into China mainland in actual use expanded 9.9% year on year, nearly 1.16 trillion in the first 11 months of the year. Now, these are statistics coming up from China. But if you go to all the mainstream media that is anti-China, that never talk about anything good coming out of China, they'll say, oh, China is almost collapsing. China is collapsing. China is going to have millions of deaths in COVID, and all those. All these are aimed to drive the narrative that China is in decline. But statistics is showing that the US is in fact in decline. So fixed asset,
PC,
yeah.
very funny when you say this. I have also seen a few YouTubers. I don't know whether they're from US. Keep on saying that China is dying. China is, the economy. They will have economic recession and everything else. Just recently only.
Yeah, and everyone is talking about China's birth rate is going to doom China. And later we'll talk about Japan. I think this is the first time I talk about Japan. And also I think if we were to compare with others, okay, not many people talk about Japan either. Okay, it's always either China or US. So fixed asset investment in from January to November total 52 trillion, up 5.3% year on year. Now, but you have to distinguish, fixed asset investment is different. But if you look at China's investment in property development went down 9.8% year on year. Now, 2021 is already down. Right now, 2022 is still down, okay? In the first 11 months of 2020, commercial housing sales, in terms of floor area, total 1.21 billion square meter, down 23.3%. In terms of value, sales fell 26.6%. That means that the price is falling at a quicker rate, okay, to 11.86 trillion. And that is why in our book, we predicted that, China has already gone down so much. In 2023, US will go down at a much faster rate than China, okay, because their property, in terms of housing, okay, because China housing has already gone bust in 2021, right through 2022. And 2023 will likely to slow down, okay, but based on current situation, has yet to see a revival. Now, but one thing is interesting, the Chinese government is encouraging formation of REITs to help boost the property sector. So what this helps is that they want, there's a lot of units that are actually being used for rental. So the government is encouraging that these companies actually set up a trust, okay? So when they set up a trust, that means they are able to sell it to the market and then get the money, and then they can actually help develop the real estate. So China is right now urging strongly those that are very viable, which means they have a continuous growth in their revenue and profit, to convert it into a REITs. So that is why that could see the commercial real estate in China stabilizing. So if let's say commercial real estate has stabilized, then I think housing would then come after. So China's survey urban employment rate stood at 5.7% in November, up 5.5% in October. So that could be one of the reasons why China, is in a rush, okay, to go through all the checks and balances in December, trying to, forcing everyone to test, trying to test for COVID, partial lockdown and all those. So before they finally decided that, hey, the fatality rate is actually not so high, let's open up, because I think they are very concerned about this. Urban employment, rising from 5.5% to 5.7%, because I believe that if they do not do something soon, it will go into 6%. And if it goes into 6%, there'll be more demonstration and protests in China. So I think they actually wanted to avoid this. And therefore, December, you see them forcing so many people to take tests and all those, because I think they are trying to come up with a data to support the reopening. But of course, the more they force people, the more people protest, okay? So that's the thing with China. So now some economic activities in January could see a recovery, even though we could see explosive rise in new COVID-19 infections. In fact, they predicted that January would be a peak before coming down. However, this could weigh on the national healthcare system. Now, this will result in higher oil prices as travel and economic activities are ramped up, could coincide with the SPR refueling, which will cause oil price to escalate higher. Now, this will ensure inflation remains elevated. China is said to be mulling spending 1 trillion renminbi to spur the development of its semiconductor business. So this is so far considering and mulling, okay? It's not a fact. So one thing you should do if you want to look at some areas of investment is to watch the Chinese tech sector, which will explode once this news is confirmed by the government officials and specific areas of development is announced. Okay, so China to open up for inbound visitors and outbound travel effective from 8 January. Now, this will help boost tourism business in Macau, Hong Kong, and Southeast Asia. Downbeaten companies in the tourism trade could see a revival. So if you are interested in stocks, okay, indirectly this is telling you where, where it is. Okay, in Macau, it's gaming. Okay, Hong Kong, the Hong Kong, the F&B, the hotel sector, Southeast Asia also. So in fact, they've done a study because a lot of Chinese now are very pissed off with US and Europe. So most of the travel will be within Asia. Okay, and they see that in fact, in Southeast Asia, Thailand ranked #1. Okay, so if you have interest in Thailand's related stock, especially if they are those tourism related, has been pretty downbeaten, you can also explore some of it. Okay.
Yeah, and also I think Malaysia also could be one of the destinations.
Yeah,
also.
because they don't travel to Thailand they don't travel to Thailand in just one country. Normally it will cover the entire Southeast Asia. So there could be some beneficial spill over here. But here we don't share about stock picking, but both Casey Lau and I, we actually run an IFS program, which we do analysis of companies throughout the world, including Japan. Recently we did in Indonesia, US, Hong Kong, and such. Yeah, so Japan. Now, this is something that everyone never talk about the collapse of Japan, but this is what the data says. Okay, so Japan created a stir in December when it raised its 10-year yield control from 25 basis point to 50 basis point. Now, this caused the yen to spike and the US dollar to retreat. Now, the increase in yield could have wide ramifications for the government, as it is tantamount to an increase in government borrowing cost. Now, that means that the borrowing cost could easily double for the Japanese government, which means the interest payment, okay, could double. And not only that, the bond value that the BOJ has bought the 10-year yield, the 10-year throughout the past few years easily has halved. Okay, now Japan's government debt to GDP as at September 2022 is 266% of its GDP. It is a debt which the Japanese government can never repay. Now, Japan's total debt to GDP is 1,325% according to CEIC data. So can you imagine if you are earning 100,000 a year, but you actually own you actually owe people 10 million. Okay, that's how bad it is. Okay, so sorry, you actually owe 1 million. Okay, not 10 million. 1,000 over percent, 13 times. So you owe people 1.3 million. With what you have at 100,000. So now that means that the Japan government is totally bankrupt. Now, people like to say collapse of China. Yes, China debt is also very high, but China's debt is around 350% of GDP, of which 250% is actually companies related debt. Its households debt is low, and so is the government debt. It's the corporate debt that is the main contributor, in China, about 250% to about 260% of GDP. And majority of that are actually the property companies. So that is why you see that China wants the property sector to crash, to push all these companies into stop, it's like stopping them from borrowing, so that they liquidate their asset to pay off their debt. Because China is not going to help them. China did not build out any of these companies. Okay, you know, like Evergrande, they have to, you know, sell off their HQ in Hong Kong, you know, sell this business, sell that business, you know. They can borrow from the government, subject that they must actually complete the building that they have sold. Then the government will finance them. Okay. If they take the money from government, if they don't complete the project, then they will be liable. So that's why, you know, with the majority of debt in the property sector, the government is actually pulling off, you know, it's like pulling the economy from a brink of a debt collapse. So it would rather collapse the property sector, but generally the other sector remain in good health. Okay, that's why we see the commercial real estate is suffering, but then the infrastructure investment, fixed investment, and investment in plant, okay, investment in intelligent factories, investment in intelligent factories, investment in infrastructure is helping the fixed income, the fixed asset investment to actually register a positive growth. Although the housing and commercial real estate is actually having a negative growth. So that is why China wants to pull the real estate down, because rather one sector, you know, fall, rather than it keeps on dragging and then eventually all the entire economy suffers. So that is why, you know, even though the property sector continue to fall, people are saying that Evergrande will be the layman of China. Okay, China is going to collapse because of this, you know, but so far it's still okay because they know what they were doing. Okay, whereas during the, you know, when the housing crisis, everyone is not acknowledging it, the Fed is still saying that everything is contained. Okay, so that's the that's the difference, okay, between the how the Chinese and US government works, because the US have lost its industrial capacity. Everything is on financialization of asset, because if financialization of asset falls, the entire economy falls. So that is the different why government come up with their own narrative. Yeah. So as I mentioned, Japan's total debt is 1,365%. How is Japan ever going to repay that? Now, recently, the Japan government intends to increase its military spending in 2023 to US 315 billion. Now, 315 billion is almost as high as China, okay? Or yen 43 trillion. Now, this will only doom Japan's economy to an ever debt spiral. You imagine 315 billion being added, okay, to a 266% government debt to GDP. It will actually push it closer to, now if we look at it, how high Japan is the world third largest GDP after China, and it's about at 6 trillion. So 315 billion will add easily another 5% plus to its GDP, but will add another 5% plus to its debt to GDP. But because Japanese government is constantly borrowing money just to pay off its interest, if we add that 5% plus the increase in the yield, the interest that it needs to pay, we will likely see 300% within a very short time frame, probably in about 2 years. So that is why Japan's economy is doomed. Okay, and if the Japanese government continue to spend money like this, Japan could be the trigger to a financial earthquake. Now, there are two financial earthquake potential. One is in Europe, one is in Japan. So either one could actually cause a wide ripple to hurt majority of the globally systematic important banks, or G-SIBs. Okay, this is one thing that could trigger it. So let's look at how China and Japan, you know, is going to dump more US Treasury. USTs means US Treasuries. So as of September, China has, you can see that, from more than about 1.2 trillion, China's have sold off US Treasuries to about 933 in September. But look here, in October, Japan holding of US Treasuries fell to 1.07 trillion from 1.12 trillion. So inside a month, Japan has actually dumped more than 100 billion of US Treasury. Why? Because it needs to support the yen. And China has dumped about 23 billion US dollar. Some people say, oh, China need to sell US Treasury because they need to support the renminbi. Yes and no. I think more importantly, China is selling US Treasury, get the dollars and buy gold. Okay, so China was reported to be one of the major buyers of gold in Q3. So let's look at the global geopolitics. Signs of winter campaign as Russia moves troops and military hardware into Belarus. Now, this could be a strategic move to draw away Ukraine troops from the Donbas area. So because if it moves its troops and military hardware to Belarus, Kiev would be very worried that Russia might want to attack the city, from Belarus. So what they do is that they draw up reserves, okay, to surround Kiev. So that means pulling the troops away from the Donbas, but whereas Russia could actually attack the southern side and the eastern side, could be pushing its way to Odessa. So this could be a strategic move. We don't know. We can only anticipate. We can only see what will unfold. Now, US to send Patriot missile defense to Ukraine might involve US troops being targeted. So the US was saying that no, the Ukraine troops will train them in US, then we'll ship them, we'll ship the system and to the Ukraine to be managed by Ukrainian troops. I don't think that will happen. A lot of people are anticipating that no matter how they say it will be Ukraine troops, US troops will still be on the ground, okay? Because you won't. It takes, some people say it takes about 12 months to train a very efficient unit, 6 months to 12 months. So if 6 to 12 months can happen a lot to Ukraine already, okay? So the US were thinking that, okay, we'll send the Patriot missile defense system, then we'll help to reduce some of the attacks. So one of the geopolitical analysts, Brian Baletic, was saying that it's quite impossible. So likely it will involve US troops. Now, the moment that US troops are in the ground, then if Russia decide to attack the Patriot missile defense system, there'll be US casualties. Already there are special forces from all over NATO that are operating in Ukraine. And this is something similar like Vietnam. First is advisor, then plan, then it comes as military planners, then you have special services, then you have the main troops. So this, unless cooler head prevail, I think Ukraine will lead to potentially to a Vietnam similarity. Yeah. Then there's already conflict brewing between Serbia, which is seen as pro-Russia, and Kosovo, which is pro-NATO. Okay. So this could be something that the NATO has done, okay, to instigate a crisis in Serbia, so that it helps to distract Russia, okay, from being concentrating on Ukraine. So you can see all these political game chess pieces being moved about in Europe, which can only be to the detrimental of the Europe. So more rhetoric against Iran as the JCPOA is doomed for failure. Okay, there's not going to be any nuclear deal, and Iran will move closer towards the SCO and BRICS sphere of influence. So US could also ramp up rhetoric against OPEC and GCC countries as they shift their alliance towards Russia and China. There's been a lot of talk about the no OPEC deal, the short term for no OPEC, which is to make it criminal that the operations of the OPEC as antitrust, as you know, as an antitrust movement. So more countries will announce joining BRICS. I think in January we'll see another, few more countries stating that they will join BRICS. So Evelyn, back to you. Evelyn?
Okay, thanks, PC. Okay, let me just share my slides here. I'm here. Okay, so let me just share again. Okay, you can see, Okay, can y'all see my slides now?
Yep.
Okay, good. So I think PC has given a lot of outlook on January, and some of these is actually we also have already predicted in our book for the whole of next year on 2023. And this book, both PC and I think some of the members here already got the book. I hope you have read it. And I do not know how you all find the book. Can give me some feedback for those who have written about the book, those who have already read the book. So we have put in the outlook from the astrologist's point of view, and then also for the individual performance of the 5 element sectors, each of these 5 elements in Chinese astrology that represents an economic sectors, and also the outlook and the opportunity in each of these sectors in that book. And actually, you can get a free chapter preview on here. This one we later will drop this link into the chat box. Okay, and this book is actually available also. I think PC, you can also drop the link how to purchase the book. It's an ebook. You can purchase it in the ebook platform, and you can also actually get this book for free with a membership. So the membership itself, we will, tells you about the foresights about what are the opportunity that is available potentially. And it will also enable you to get the more correct information, because we have screened the information, and we have also used one thing is energy does not lie. Anyone can manipulate data, but energy can, the universe, the rotating of the universe, the planets and all this do not lie. So it's from there that we use astrology. It's not something superstitious. For those who are new to Chinese astrology, it has been proven for many, many years. We have already talked about that as well in our book preview. Why this is very accurate. And in olden days, people already use this for the global trends or the country trends, economic or harvest forecast for the year. And for this membership, you can attend an annual 2023 forecast via Zoom session that we will, we will conduct especially for the members, and also for the week, for the monthly, you will get the content actually 2 weeks ahead of what we release in the YouTube channel. We always release the content into the YouTube channel. I'm sure you all knows that. Okay, so but for members, they will get it, for the like now. This is for the members. Like maybe by this weekend they will get the content already. But when we release and open to the public, it will be 2 weeks later. It will be somewhere in the middle of the month already. Okay, so there will be a private Telegram group. Some of you are already in. And then also we will also throw in the PDF file of the monthly presentation as well. Okay. So for those who are interested, and once you get the book, you can, open for membership. You can enroll in our membership if you are interested. So you can use it to offset the price of the book. The membership is actually 129. Okay, it's 129, and we have, if you buy the book, you can go to this Google form to upload the proof of the purchase, capture the screen, and then we will offset this 39 ringgit, which is about $890 is plus minus, depends on the currency, the exchange currency. So it's only $90 for the whole of 12 months. That means per month is less than 10 ringgit for a price of less than a Starbucks coffee per month. You get such good quality information and guidance from both me and BC. So I think this is a pretty good deal. I mean, how much is 90 ringgit today? We have to charge because we also do a lot of research, and all this research also costs us money as well. Okay. Okay, so I think for those that's not seen the book yet, you can always go to this. Let me just drop a link here. Later I will drop the link into the chat box that you can check out the free chapter of the book. Okay, and this one. So next is that this is the instruction. So next is that for those who are new, we appreciate if you can subscribe to our YouTube channel. We have contents in the YouTube channel. This talk, as well as my one, is on some other content, and PC one will be on some of the talks or some of the content related to the global trend and in-depth research as well. So you can subscribe to both channels to get a perspective. And finally, we will have a summary. So what I will summarize is that it's a month where things will seems to be recover, and also the weather will be milder. I have already stated also in my book, in our book in PC, in the book where we written in Astrology 2023 and Global Trends Research, that traveling will be quite a prominent industries next year. Also, I have predicted that because I do see some travel elements in the energy chart. So this is in line with what BCS says, and because China also decided to open the border, so this is something that is already in line with with the current situation or current trends that is going on as well. Okay, so PC, over to you to make the summary from your side.
Yeah, I think that already, as I shown in the charts, there are more signs of economic problems in the US. Okay, so, and we will see more US and Europe funding falling into the financial black hole in Ukraine. And, after this 45 billion plus, of aid to Ukraine, I think over the next few months, you will see another lump sum because the US Congress is fully behind Ukraine. And, if you look at how US House of Representatives and senators are being financed by the military industrial complex, you will understand why they will want to keep this war going for forever, okay, or to the last Ukrainian, because it's good business. Okay, the US is in the business of waging war. Out of its 253 years of existence, there were only 12 years where the US is totally not at war with any country. So China and Japan will continue to dump more US treasuries. I think Japan, that bubble is very vulnerable. Okay, and therefore Japan would actually try to defend the yen, whereas China will dump because it sees no incentive to keep on financing the US, which continue to instigate troubles against China. So there's no incentive for China to to own huge amount of US treasuries. And you can see that just this morning also there's news that the trade of Russia to renminbi, ruble and renminbi has surpassed the trade of ruble to Russia, to US dollar. And in fact, the Russian major corporations as well as Russian government say that they are prepared to issue bonds that are denominated in renminbi. So there could be chances of a major winter offensive by Russia is quite high judging that by the movement of troops in in Belarus as well as in the Donbass area. So I think there'll be more countries who will announce their interest to join BRICS, and it could be a number of African countries. I won't be surprised if, let's say, in Southeast Asia, we could see more interest to join BRICS, especially in Cambodia, in Thailand, as well as Indonesia. These countries look more, or even Laos for that matter, okay, more easier to cooperate with China on multiple aspects of their economy. So some of the questions I've already answered. Okay, now like what happens if there's a recession? Will it bring the price of oil down? I think as I mentioned, Russia and OPEC will always want to watch the price of oil and not allow it to go on a downward trajectory by cutting production. Okay, saying that due to recession concerns. Okay, but I think once recession sets in, the Fed will not immediately pivot. I think what will force the Fed to pivot is when the job losses becomes too high, and no manipulation of data could actually help that fact, that the U.S. economy is, is imploding. So if that happens, then I think, the amount of QE that is needed. Now, in 2008, when the financial bubble burst, okay, the Fed actually printed 5 times the amount of money, okay, to allow the US economy to come out of the global financial crisis in 2 years. That was when the US, that was when the Fed balance sheet was just at $800 billion. They, to embark on QE, they increased their balance sheet from 800 billion to $4 trillion. Right now, the Fed balance sheet is at 8.5 trillion. Okay, $8.5 trillion. If they need to arrest or need to have a QE to help the US economy, I don't think printing 5 times 8.5 trillion would actually help. Okay, that means even 40 trillion QE might not help at all. Okay, even at 5 times at 40 trillion, that will see the price of commodities skyrocket like they have never been before. So that is why not only myself or for that matter, Evelyn, but if you look at a lot of major investment banks, they are predicting a 10-year commodity cycle. And some economists are predicting a 10-year inflationary cycle. So that means that we are right now, where the price of commodities are concerned, we are at the very beginning of a super bull market. Because once recession sets in, with 8.5 trillion in the balance sheet of the Fed, the amount of QE is going to be beyond words. Okay, and already you can see the EU fractioning because of this needing to jack up interest rate, while a lot of countries are suffering, especially the peripheral countries. Italy is seeing higher interest, but that is also at its highest. How can they continue to fund? That is why I think we way back in our very first episode, we sort of predicted that there's going to be fraction in EU. Okay, and the EU might break apart because of these imbalances of finances between different countries. Okay, So any other questions? Otherwise, we'll call it a day.
Okay, I think there's one more question. Does China opening will have a good impact for Malaysia's palm oil sector?
Yeah, I think the if we look at it, one of the things that hinders the consumption of palm oil, especially where China is concerned, is the restriction placed. But if let's say it's fully open, okay, the F&B business in China is going to explode, it's going to thrive. Okay. So if that happens, then I think there will be increase in palm oil. But I think another thing that we never explore is the potential for poor harvest due to flooding. Okay.
The weather?
Yeah, the weather.
Yeah.
Okay, like current wet weather can actually hamper the harvesting. We don't know. Okay, and some crops might be destroyed. And because in the astrology, we already say that there's going to be more flooding in the years. And way back in 2018, in one of my seminars with Pacific Securities Inter-Pacific Securities in Johor Bahru, was that I told the people that the solar sunspot was not seen in 2018. So often when that the last time it happened, it heralded the arrival of a mini ice age, and that was a few centuries ago. And what this means is that without the sunspot, the weather will become very unpredictable. There'll be, in the northern hemisphere, severe cold, and in the tropics there'll be more flooding. So this is what the sunspot, this is how to a certain extent it's also about energy, and what the planets tell us sometimes could be well in advance of what will eventually happen. So with the sunspots missing, some scientists are already predicting a grand solar minima, which happened a few centuries ago. Okay, and this will cause a lot of weather disruptions to the earth. And that is why I think moving forward, we'll see more flooding, and this could actually affect the price of food as well. Okay, while it may not impact here very dramatically, someplace else, because palm oil is not just planted in Malaysia and Indonesia, it's planted now even in South America. Okay, so some parts of flooding, some parts of sudden drought, okay, or sudden flooding could actually hamper the production elsewhere. So and it goes to show that coming for example, the astrology chart is showing that food prices will remain quite high. Yeah, so that could only mean that harvest is being affected, and one chain also leads to another. And if let's say one agricultural sector is facing certain productivity, certain production shortfall, it will implement others as well. For example, not necessarily it just involves palm oil. For example, rapeseed oil. Okay, let's say severe winter. Okay, rapeseed, for example, in Canada, due to severe winter, rapeseed oil is being devastated. Okay, or severe drought in the US devastated the soybean production. Then that would actually fit into the palm oil as well. So that's why the unpredictability of weather will actually create a chain reaction throughout the commodity sector. Hope this helped explain your question. Okay, any other questions?
Let's look at if there's any other questions from the floor. I think there's none. Should be okay. So yeah, so I just want to say thank you for everyone who called in today. For those who are new to our platform, welcome. And I hope that you could also join us monthly to listen to our talk. So Happy New Year, everyone, and hope you have a good year ahead of you. Thank you. Bye-bye.
Yeah, and please remember to go to our YouTube channel. Help us spread, like, subscribe or share. okay, because it will actually help us, you know, expand our platform. We need this more of this kind of support to get to a wider audience, so that it keeps the channel running, okay, and also incentive for us to expand with more products eventually. Okay, thank you very much, and have a very nice new year ahead. Bye bye.
Yeah, okay, thank you. Okay, so I